let's go back to LBMA, and was it December or November? They run into a problem where they were supposed to have X number of ounces, and it all of a sudden became not available. And so they had to fly in like oodles of tons of silver from the U.S. and Switzerland and China and all these places. And so they didn't have to declare force majeure. But the giant sucking sound that you hear every day when you get up in the morning is the sound of silver disappearing out of all of the ETFs and mutual funds. It started in October, it increased in November, it increased in December. It has not stopped in January. I put these numbers are in my column every single day. In January, just to give you an idea, in all of January, the COMEX received 8.443 million ounces of silver, but shipped out 51 million. Okay, and in February, they received only 3 million ounces in all the depositories, and there's about 8 or 9 of them. And they shipped out another 51 million ounces. So in 2 months, okay, after the squeeze is over in the LBMA, the COMEX has parted with 102 million ounces of silver. That's a lot.
The global silver market has drawn renewed attention after analyst Ed Steer highlighted unusual movements in bullion inventories. According to Steer, stress first appeared around October and intensified through November and December, when the London Bullion Market Association, LBMA, reportedly faced tight physical supply. Large quantities of silver were allegedly flown in from the United States, Switzerland, and China to stabilize the market and avoid a force majeure situation. Meanwhile, warehouse data from the COMEX showed a sharp imbalance, about 8.4 million ounces received in January, but roughly 51 million shipped out, followed by only 3 million received and another 51 million leaving in February. These trends suggest strong demand and shrinking visible silver inventories worldwide. Now, we present the clips from Ed Steer's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
It increased in November, it increased in December. It has not stopped in January. I put these numbers are in my column every single day. In January, just to give you an idea, in all of January, the COMEX received 8.443 million ounces of silver, but shipped out 51 million. Okay, and in February, they received only 3 million ounces in all the depositories, and there's about 8 or 9 of them. And they shipped out another 51 million ounces. So in 2 months, okay, after the squeeze is over in the LBMA, the COMEX has parted with 102 million ounces of silver. That's a lot. And let me just go to gold for a second. In January, they only received 80,000 ounces at the COMEX, but shipped out 858,000 ounces of it. And it's even worse in February. They received 152,000 ounces, but shipped out 2.6 million ounces of the stuff. So the sucking sound is not confined just to silver. In the COMEX, it's gold as well. And if we want to go overseas to the Shanghai Gold Exchange and the Shanghai Futures Exchange, I've got the data for tomorrow's column right in front of me right now. The Shanghai Gold Exchange and the Shanghai Futures Exchange both, shipped out metal during the last week, quite a bit of it. And my comment here is that combined, the Shanghai Gold Exchange and Shanghai Futures silver inventories are back to what they were in October of 2015, which is ultra low compared to what they held in the past. They're scraping the bottom of the barrel. They're almost out, okay? And how much silver is left on the COMEX that they can ship out that is, because they can only ship out silver that the owners are prepared to send out. Sooner or later, they're going to run into a brick wall that nobody's prepared to part with their silver. So this sucking sound has been going on absolutely everywhere for a very long period of time, and not just these two. Not just the COMEX and not just the Shanghai Gold Exchange or the Shanghai Futures Exchange. All of these silver ETFs have been puking up silver for the last 3 or 4 months. I'll tell you what, I've been doing this now for 25 years, and I get the numbers from my chartist, Nick Laird, and he does the best that he can with all the data that he gets, and you have to assume that if it's not 100% correct, it might be 97% correct. You may miss this or miss that, but in the overall, you can see the trend. U.S. silver imports and exports, which was in my column today, they received 260 tons from Mexico. This is December, and they shipped out 281 tons, and it all went to the UK, of course, the UK being the LBMA. So that all that does is prove that all this silver is getting shipped out. That's for December, and of course for January and February, because there's 51 million ounces left of COMEX, and both months. The other big silver that's leaving is from Switzerland. Now I don't have the numbers in front of me right now, but Switzerland refines a lot of silver, and all I remember about that is that most of their exports were to the LBMA as well, because LBMA is the physical market for everything. If you want to go out and buy 30 million ounces or 13 million ounces like India does quite regularly, you don't go into the COMEX futures market and buy it, okay? Because 20 million ounces, 40,000 COMEX contracts, or 4,000, and of course you did that, silver would be at like $500 an ounce in 5 minutes. So what you do is you go to London, okay, and that's where you get your physical gold and your physical silver, and you can buy whatever quantity you want and lock in a price that doesn't disturb the market. It's as crooked as hell, but that's the way the system works. It only works up until the point where you get to the bottom of the barrel, like they did in the LBMA, and somebody shows up and says, I want 10 million ounces, and they go to turn around and get it from what's in the inventory, and they find out by looking at it and said, I'm sorry, but we don't want to sell. And all of a sudden, boom, goes the price, and panic sets in, and airplanes leave the COMEX, twice a day with, 3.5 million ounces per plane load to try to fill the gap.
A growing debate in the precious metals market centers on shrinking physical inventories across major exchanges. Market analyst Ed Steer has pointed to striking warehouse data showing heavy outflows of silver and gold from COMEX in recent months. In January, COMEX reportedly received about 8.4 million ounces of silver, but shipped out nearly 51 million ounces. February showed a similar pattern, with only 3 million ounces received and another 51 million ounces leaving depositories. Gold inventories also saw significant withdrawals during the same period. Meanwhile, the Shanghai Gold Exchange and global silver ETFs have reportedly reduced holdings, suggesting strong physical demand and tightening supply in the global bullion market. Let's get back to the interview.
If China really wants to, they could really stick it not only to the U.S., but the rest of the West. By restricting silver exports. They're the largest refiner of silver in the world. They're the second largest producer of silver in the world. And their inventory levels at the Shanghai Gold Exchange and Shanghai Futures Exchange are the lowest they've been since 11 years. I mean, there's nothing there. There's like 9 or 10 million ounces or 20 million ounces total. There's just nothing. Okay. And they could just pipe up and say, look, I'll tell you what, because of they could mention the fact that, the structural deficit in silver, that we've decided to restrict exports to 10% of what we're exporting now, and then the fox would really be amongst the chickens. And I don't care how much paper they throw at the silver price on the COMEX, we would see a silver price in the 3-digit category that would just shock everyone. If China really wants to, they could really stick it not only to the U.S., but the rest of the West. And by restricting silver exports. They're the largest refiner of silver in the world. They're the second largest producer of silver in the world. And their inventory levels at the Shanghai Gold Exchange and Shanghai Futures Exchange are the lowest they've been since 11 years. I mean, there's nothing there. There's like 9 or 10 million ounces or 20 million ounces total. There's just nothing. Okay. And they could just pipe up and say, look, I'll tell you what, because of they could mention the fact that, the structural deficit in silver, that we've decided to restrict exports to 10% of what we're exporting now, and then the fox would really be amongst the chickens. And I don't care how much paper they throw at the silver price on the COMEX, we would see a silver price in the 3-digit category that would just shock everyone.
Could you please contrast that potential action that China could make that you described rather than what they already have declared, which is government review and case-by-case granting or refusing to grant of exports for silver? Can you clarify the difference?
I'll tell you what, there's a lot of controversy on that. From what I see talking to the retailers is that the refiners are only, like you just mentioned, they're only taking 3 9s or 4 9s, mainly because the problem is the fact that the price is now so volatile that, they could say, okay, fine, I'll pay you $90 an ounce for your 90% pure bullion, okay, your American coinage, and they could take it, and it takes 6 weeks or 5 weeks or 4 weeks for them to get it refined into good delivery form or a product that they can sell. In the meantime, the price of silver has gone from $93 down to $79. So they're just saying, look, we just can't do this anymore. I mean, we're losing money on this. I mean, the prices are all over the map. So, what they do is the reason they're taking the 3 9s and 4 9s is they can take the stuff and they can throw it right in the melting pot and have it out the door in a good delivery form of whatever, whether it's good delivery bars or whatever they're making that day. But they can do it quickly so they can lock in the price that they bought it at and also lock in the price they're selling it at within a 24-hour time period. So, the amount of these, coinage, whether it be Canadian, American, or European, or whatever the heck it is, the time to process it, okay, between the time that they lock in a price and the time they sell it is so enormous that they can't guarantee that, okay? And so that's the main reason, okay, that they're if they had a steady price, they could probably do it all day long, but they don't have that, and they're tying up a lot of money. And it's if they take a flyer at $100, who guarantees it's going to be $100 by the time it gets refined in good delivery form and hitting out the door?
Growing debate surrounds China's influence on the global silver market as inventories tighten across major exchanges. Analysts, including Ed Steer, suggest that China, one of the world's largest silver refiners and producers, could dramatically impact prices if it restricted exports. With reportedly low inventories at the Shanghai Gold Exchange and Shanghai Futures Exchange, even a modest export cut could intensify the global silver deficit. Such a move might push silver prices into the 3-digit range if supply shocks spread across Western markets like COMEX. Currently, China has not imposed a full restriction, but instead reviews exports on a case-by-case basis, balancing domestic demand with international market stability. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.